Howdy, folks. Dr. Jeff Camarda, Wednesday, April 15th, with what should be a pretty brief report. The market, there's this economic news, the so-called Fed Beige Book and public companies reporting has been predictably dire, and it's starting to seep into market sentiment. The market has been down most of the day. In my view, again, this is just kind of intraday chop volatility, 500 points, even 1,000 points on a Dow is really not that significant a move these days. Of course, the financial media and press are making that to stock sell off, plunge on economic news. I'm not convinced that we're going much lower, but I am quite concerned that as the realities of the economic situation become apparent to most market participants, that stocks will in fact go lower. So we still feel that we're in a bear market and we haven't plumbed the bottom yet. And we are actually quite pleased to have executed the sell wave 2 for AIMS in our structured liquidity directive a couple of days ago. And still looking to see, where I guess our assessment now is we are observing how the market reacts to the drumbeat of economic news that will be released over the next couple of weeks to assess how close we feel we are to a bottom. We are pretty much locked and loaded on the sectors and individual stocks that we want to deploy into when we think the time is opportune, hopefully at lower levels now. But we're still kind of wait and see here. So again, not a whole lot to report today. I did also have been thinking, and I'm going to write a report on the COVID economic crisis and the implications for the market and the economy and advice and going forward. And one of the things that I'll dwell on is which I touched on yesterday, is a very, very high likelihood, in my view, of significant future tax increases in the United States. While the economy was still humming along before COVID hit, we were still, didn't get much press, but at record, catastrophic levels of debt for the United States government, which continue to increase. And now with the trillions and trillions of dollars of free money that's pouring out, much of which, of course, will sadly be wasted. Government's very good at that. Ultimately, I think there's going to be a day of reckoning, and those bills are going to have to be paid, and those bills will present in terms of higher taxes and higher inflation going forward, unless you're an adherent of the so-called modern monetary theory, which I think is hooey. Some folks believe, however, that a government like the United States can print as much money in its own currency as it wants to without really any ill effects. I'm not in that camp, but we'll see. In any event, that's it for today. Another update tomorrow, Thursday. Until then, keep on smiling. This is Dr. Jeff Camarda signing out for today. Adios.